So what's going on, family? You guys can see this. You can read the title, right? Look at it. Rivian cuts 1% of the workforce in their second round of layoffs this year. This is the second time that Rivian is laying off employees. If this doesn't tell you that there's issues going on with the business and how it is being ran, I don't know what will. So given that you know this, that this is the second time that Rivian is cutting employees, reducing their workforce, I shouldn't have to tell you what the stock looked like. You guys should look at the stock chart for Rivian right here. Look at this. I'm going to zoom out. This is what a troubled stock look like. This tells you that whatever business, if you see a chart like this, this tells you that the business is in trouble, massively in trouble, and that the only way that we can see any resolution to this issue of a business that looks like this on a price chart is either they get a massive cash infusion, or they merge with another bigger business to absorb all of their debt, their issues that they have in the business. I wouldn't expect Rivian to come all the way back to its glory days to where it's traded around $150 unless they get some cash, because they're burning through cash. That's why they're laying off people right now. They already laid off one half of their workforce this year, and now they're doing a second layoff in the same year. That tells you how fast that the money is burning in Rivian. And can they advertise to try to get more vehicles sold? How can they change this around? Earnings is coming up beginning of May. You guys can see it right there. May the 7th, so it's next week. I mean, week and a half, I guess. But look, electric vehicle maker Rivian said on Wednesday it cut about 1% in its workforce, the second round of job cuts this year, as it reduces costs amid a broader slowdown in EV demand. People ain't buying EVs like people thought they were. Shares of Rivian, up as much as 3.4% on Wednesday, paired almost all of its gains after the news came out. The shares closed up 1% on Thursday. Quote, "This was a difficult decision, but a necessary one to support our goal to be gross margin positive by the end of the year," end quote. The maker of the R1S SUV and R1T pickup truck said in an email to Reuters, adding that the cuts were focused on staff supporting the business. Yes, every employee supports the business. The move follows a 10% layoff at Rivian in February, when the company disappointed investors with a lower than expected 2024 production forecast. As of December 31st, Rivian had 16,790 employees across North America and Europe, according to its annual report. Reducing costs is crucial for Rivian, as high interest rates to rein in inflation have hurt consumer demand for EVs and are typically more expensive than their gas-powered counterparts. They've been reducing costs, talking about Rivian, by building some parts in-house and renegotiating supply contracts. It has also shut down its production line for an upgrade to increase efficiency to help reduce costs. Ouch. Can this be saved? That's the question that I want to pose to you. Can Rivian be saved? Because I know a lot of people who may cover Rivian on YouTube would say buy the dip, right? But look at how long Rivian has been dipping. It makes no sense. They tell you to buy the dip. Buying the dip makes sense if you can time where the bottom is. And it makes sense if the overall business structure of the company that you're buying the stock for is not in trouble. Rivian looks to be in trouble. You cannot go from a once ago to where price was trading all the way up here once it was initialized in the public offering, trading at $120, went down to $100, fell down to $80, then it went down to $60, then it went down to $40, then it went down to $20, came back up to towards 40, and ever since then it's been a downhill trend. If interest rates, if people aren't able to go out and buy more EV vehicles, specifically Rivian type EV vehicles, what do you think is going to happen to the business? So I wouldn't be surprised if something tries to hit the news wire to try to make life come back into the stock. This is usually what they do when you see a price action like this of a chart to where it's just going down. So maybe they might drop something on the news wire, like I told you. Oh, they're going to get a massive cash infusion from Jeff Bezos, right? And then that might allow the stock to go up a couple of dollars, but then you'll see it come right back down. Oh, there's talks that Rivian is going to merge with Tesla, right? Something of that sort. Oh, the stock may go up for a couple of days, couple of weeks, but once the news die down, the stock goes right back down. Okay, so I did a price prediction though. Let me show you. Keeping it real, right here, back in the beginning of March, looking for the price to go up in Rivian. I wasn't massively bullish, not at all, but it didn't even do that. I mean, we maybe had a day after we did our price prediction, market went up to a high of 1352, and ever since then it's been down. Didn't want to see the market break this buy zone here, and it did here. So again, this was your dead giveaway that we are now in uncharted territory. The only option is for us to say that this is a very weak stock. And I would suspect that they could also possibly use this earnings release as an opportunity to try to spur some excitement back into the stock to push the value back up higher, because it needs it. Like the market since December of last year, look at this, has lost 63%. 63%. Anything could possibly bring some more excitement into this stock just to let it go up a couple of days. Like that's what people want. That's what they're looking for. But in the grand scheme of things, when you look at this on a longer term chart, that's what a terrible stock looks like. Right here, where you got that weakness, the market on the following week supported this buy zone. That's why I was telling you earlier, we wanted to see the market hold that zone, but the moment that it didn't, again, this is not a positive looking price chart. It's scary, very scary. And by having a second layoff in less than a year, kind of makes you wonder, is this stock savable? So what we're going to do, put this back on a daily chart. We are going to create this sell zone, get rid of this price prediction because it didn't work out, get rid of this buy zone here. And apparently we don't know where the buy zone is anymore, because as of now, you guys can see them zoom out. Rivian is trading around all-time low areas. Never been here before. So I don't know how low the stock could go. It could go all the way down to $5 for all we can say. We just don't know. So give me your thoughts. And we'll see. Let's put around $6. But yeah, that's it. I'm done. Give me your thoughts. Make sure you maintain the profitability. And as always, trade different.